Today on your Finance and Economy Today, where we review facts, data, insights, and how it affects you. This year's presidential financial disclosure reveals a scale of cryptocurrency income no sitting president has ever reported, and the reported totals don't even agree with each other. We're going to break down what the filing shows, why the numbers diverge, and the conflict of interest question it raises that has never been tested in court. This week, Donald Trump filed his 2025 federal financial disclosure, a 927-page document required by law for every sitting president. Buried inside it is a staggering amount of cryptocurrency income. NBC News reported the total near $1.4 billion. Bloomberg reported at least $1.2 billion. Over the next 12 minutes, we are going to walk through exactly what the disclosure shows, why the reported numbers don't agree with each other, and the conflict of interest question that legal scholars say has never been tested against a sitting president before. Let's start with the numbers. Let us start with what actually happened. On July 1, 2026, Donald Trump filed his annual financial disclosure with the U.S. Office of Government Ethics, a document required by federal law for every sitting president. This one ran 927 pages, covering the calendar year 2025, his first full year of his second term. Reporters immediately started combing through it, and what they found was money tied to cryptocurrency on a scale no president has ever reported before. NBC News was among the first to run the numbers, putting the total cryptocurrency-related earnings in the disclosure at approximately $1.4 billion. Bloomberg, working from the same document, reported a different figure, at least $1.2 billion. CNN also covered the filing on July 2, focused on the Memecoin and crypto gains buried in the pages. Here's the thing worth sitting with. These are not rounding errors. $1.4 billion and $1.2 billion is a $200 million gap, and it exists because a 900-page disclosure form does not total things up neatly for you. Different reporters are including different line items and different types of crypto income when they add up the number. So depending on which parts of the disclosure you total, credible reporting puts the figure somewhere between $1.2 and $1.4 billion. We do not know the single exact number. Nobody outside the filing does yet. But to understand why this exists, we need to go back to the law behind it. To understand why this disclosure exists at all, you have to go back to 1978 and a law called the Ethics in Government Act. Congress passed it after Watergate, and it does one specific thing. It requires the president, the vice president, and senior federal officials to file a public financial disclosure every single year, listing their income, assets, and outside earnings. It is important to be precise about what this law is and is not. It is not a ban on the president earning money from business activities. It is not a finding that anything reported is improper. It is a transparency requirement. The government is not stopping the president from having outside income. It is simply requiring him to show the public what that income is. And enforcement is genuinely weak. The Office of Government Ethics that collects these filings cannot prosecute anyone over what is disclosed. About the only teeth the law has is a modest late filing fine if a disclosure misses its deadline. So every year, without exception, sitting presidents file this form, and every year it becomes public record for reporters and watchdog groups to pick through. Trump's 2025 disclosure, covering his first year back in office, was filed with the Office of Government Ethics and became public around the end of June into the first days of July 2026. What made this particular filing different from prior years for any president is the sheer scale and novelty of the assets involved. Presidents have historically disclosed real estate holdings, stock portfolios, book royalties, and speaking fees, familiar categories with well-understood valuation rules. Cryptocurrency and Memecoin income are new categories entirely, without decades of established disclosure precedent behind them, which is part of why outlets are landing on different totals when they try to add it all up. The law required Trump to show his work. It worked exactly as designed. The public can now see it. What people do with that information is a separate question. So where does all that money actually come from? One figure that stands out from the reporting, roughly $526 million, is attributed specifically to Memecoin activity that is separate and distinct from the broader crypto-related income also listed in the filing. For anyone unfamiliar, A memecoin is a cryptocurrency token, often created quickly and cheaply, whose value is driven almost entirely by attention, social media buzz, and the reputation of whoever is associated with it, not by any underlying product or service. Trump-linked tokens attracted enormous trading volume and speculative interest since launching, and that trading activity is what generated a meaningful share of the crypto income now showing up in the disclosure. Beyond meme coins, the broader crypto total in the filing appears to include other cryptocurrency-related business interests connected to the Trump family's expanding footprint in the digital asset space over the past year. It is worth being honest about what we can and cannot say here. We can say the disclosure documents these earnings because federal law requires him to list them. We can say named outlets, NBC, Bloomberg, and CNN, have all reported substantial crypto income in the hundreds of millions to over $1 billion range. We cannot give you a single, precise, agreed-upon number, because as we just covered, the reporting itself does not agree. What we can say with more confidence is the mechanism. Meme coins tied to a public figure's name tend to spike in value when that figure is in the news or simply talked about more, and a sitting president generates more attention than almost anyone else on Earth. That attention has a dollar value. And in 2025, a meaningful piece of that value flowed directly into Donald Trump's own disclosed earnings. Here's the legal question scholars are actually asking. Now here is the part legal scholars are actually debating. Is any of this against the rules? To answer that, you need to know about a law called 18 U.S.C. Section 208, the Federal Conflict of Interest Statute. For almost every federal official, Section 208 is strict. If you personally hold a financial asset that could be affected by an official decision you are involved in, you are generally barred from participating in that decision. It is designed to stop exactly the situation we are describing: a policymaker whose own money moves when their own policy moves. But there is a specific carve-out written into the statute, and it names the president by name. The president is exempted from Section 208. That exemption is not a loophole anyone snuck in recently. It has been part of the law for decades, generally justified on the idea that the presidency is a uniquely singular office that cannot simply recuse itself from governing. But applied to this situation, it means the standard conflict of interest rule that would restrict almost any other official from holding crypto assets while shaping crypto policy simply does not apply to the president. Then there is a second, more theoretical question that legal scholars have raised. Securities law includes insider trading rules, built around the idea that people with access to non-public market-moving information should not trade on it. A sitting president has access to more market-moving information than almost anyone: regulatory decisions and statements that can move crypto prices. Does personal financial exposure to crypto, combined with that access, create an insider trading adjacent conflict? Nobody knows, legally, because it has never been tested in court against a sitting president. This is an open gap in the law, not a settled violation. Scholars are debating the question, not answering it. So what does all this actually mean for you, and for the system? So what does this actually mean in practice, for you, and for the health of the system? In the short term, think about who is actually trading these tokens. Everyday retail crypto traders, regular people buying and selling on an app, are exposed to a level of volatility that is unusual even by crypto's already wild standards. Meme coin markets are famously volatile on a good day. When a coin's value is also tied to the public statements and popularity of one specific, highly visible individual, that volatility gets amplified. A single social media post, a policy announcement, a news cycle, any of it can move the price sharply in either direction. And ordinary buyers on the other side of those trades are the ones absorbing that swing. In the longer term, the concern critics raise is not about any one trade or any one token. It is structural. The disclosure shows a sitting president with a direct personal financial stake in the exact asset class his own administration is actively regulating, through agencies like the SEC and the CFTC, which set the rules the crypto industry operates under. Whether or not any specific action ever violates a specific law, that overlap between personal wealth and regulatory power is something the American system has not really confronted before at this scale. It raises questions about public trust in financial regulation, and about whether the tools built to manage conflicts of interest in Washington were ever designed with a scenario like this in mind. That is a question about institutions, not about any single transaction, and it is one this disclosure has now put squarely in public view. Here is the bottom line. A federal law from 1978 required Donald Trump to disclose his earnings, and it worked. The public can now see in writing hundreds of millions to over $1 billion in crypto-related income depending on whose math you use. That transparency is not proof of wrongdoing, but it does raise real, unresolved questions about a president holding personal financial stakes in the exact industry he regulates. That debate is ongoing, not settled. Tell us in the comments what you think. If this breakdown helped you understand the story behind the headlines, hit like and subscribe. We cover stories like this every week.